You have a great company but cannot get any investors currently? Here's why. Hi, I'm Oliver, CEIBS Executive MBA and Startup Coach at Askmestartup.com. I have been in the startup and coaching lab since 2014, and I want to share my know-how and insights gained on this channel with you so you can build a better and more profitable business in the future. There is a free startup checklist link in the description below. Welcome back to my channel. If you're new here, please consider subscribing and pushing that notification bell. If you're a subscriber already, welcome back, and let's deep dive into today's topic. The venture capital market is dry. Even though venture capital companies do claim that they spend money as before, reality is different. And this is from real life experience from our own company, and I'm going to share a lot of insights with you right now. Despite the communication VC companies do on Twitter or any other social media platform, reality is that they have slowed down or stopped their investment completely during that crisis. I can tell you from our experience that we've been in discussion with 50 plus investors for our next C round, and fact of the matter is they have stopped their communication and they have stopped their negotiations now at 100% level because they're all struggling themselves. But let's go further down the road here. The first and foremost reason is that we are negotiating not directly with only liquidity companies, venture capital companies as such, but with strategic partners, which are most of the time multi-billion-dollar companies. And they are currently in the same situation as we are. Their business has been declining significantly. They are facing a huge crisis. And their first and foremost thing that they have to do right now is secure survival of their own company. There is simply no time for an additional add-on like a startup or whatsoever. Currently, survival rate is plus. The only thing that they really take care of is having enough liquidity by themselves. The second reason is that the knife is falling, and nobody likes to catch a falling knife, especially not if you don't know where it's going to land. We all know that consumer behavior is going to change, but we don't know the impact and the magnitude of that change as of yet. What it actually means is that companies do not want to invest into something that they don't know is going to work after the pandemic crisis is over. With other words, nobody is willing to pay a premium on yesterday's bull market for something that might be a bear in today's world. So that's why those companies might not upfront tell you we're not going to invest, but they rather, let's say, expend the timing a little bit. Maybe another week of due diligence. I mean, what is another week of due diligence, right? Or maybe stuff is getting stuck in legal. Yeah, because legal is not working properly right now. Really? No, reality is they slow down the process so they don't have to spend the money that they already have available to spend, but they rather spend it on something that is valid for the future. And they don't know if your business and your business model is actually working in tomorrow's world. I mean, let's get this straight. Venture capital companies are not paid to bet on how markets are going to be next week, but a couple of years down the road. And let's face it, it's currently impossible to do that because we don't know how severe things are going to shift and in which direction. So what are the effects? Well, first of all, you will have to live off your already collected funds a lot longer. And I mean a lot longer. 6 months, a year, who knows? You might need to start bootstrapping your company. Second, you need to get into contact with your already existing investors and ask them for additional support, or at least get them ready, prepared to help you when times are getting even rougher. The third thing is you need to find a way to grow when everything around you is shrinking. And that really is a tough call. I know, but that's reality. But let's not speculate. Here is a survey conducted by the Swiss ICT Investor Club and the Business Angel Switzerland. They collected the responses of 65 investors, and this should give us a pretty good idea of what to expect as a startup in the future coming from now. There will be a link to the survey in the description below. Now, let's go to the first one, and you can see that 79% believe that there will be a recession. And that is important because that also gives you an outline of what their expectations will be and how they are going to act. They're also very pessimistic about the recovery. 44% do not believe that a recovery will happen before October 2020 and until April 21. 26 are believing that this recovery will only start as of April 2021. And some of them believe that recovery going back to normal will be by January 2022. You can see already from here that this is pretty long run, and that they are really pessimistic about how things are going to evolve. That actually means that they don't expect anything great to happen within the next 6 months to 1.5 years. We can also see that the majority of angel investors, and that's 52%, is actually expecting to shift their investment strategy moderately. And then there is another 21% that are shifting it significantly, which actually means that they are looking into new industries, new fields of investment than they used to do before, because they are aware that things are changing. They just might not know where and what, but they are aware that. And so that's why they are slowing down their current investment, because they want to bet on the right horse. Rather worrying to new startups and founders is the expected capital allocation for those investors in the future, with 45% stating that they will have no changes, but 34% will invest less, 11% much less, and 6% are having stopped investing completely. Now, actually what it means is that the landscape is also shifting, and most likely a lot of those investors are not up to speed or have had maybe some bad downstream investments before. A slightly different pattern manifests itself when being asked about their intentions on already existing investments. 53% will do the same as before, with only a minority investing less or nothing at all. So these are actually pretty good news, because it means if you already have some investors, you're more likely to get some funding, even though times are rough. That also has to do with the fact that the venture capital companies don't want to lose their investments right now, as long as they see a potential future for it, of course. I mean, if there's no future, then of course they will also stop the investment completely. A more critical point is that the majority of investors actually rate the current asking prices or valuations for the companies as too high. That is actually bad news for us as founders, but that's reality. And 75% of founders have not yet adjusted their valuation to the current situation, meaning that they are out of scope for today's business world, which is also one of the points most likely that why we see a lot of mismatches currently and a lot of no's or delays in processes. As an indication, we can see that the investors expect 20 to 25% decrease in valuations over the next months, and they actually see a moderate decrease in valuation by the complete whole year, which means that no matter what business you're in, your evaluation of your company is going to decrease, meaning you will have less money to spend and people are giving you less money, or you need to give more equity in exchange. Either way, it's not looking good for us right now. And that's another point I want to share with you as an insight from our company. Currently, we're in the situation that we should have gone, full steam ahead, but we can't. And the investors are now, arguing, well, if it takes you longer to go to market, of course, your valuation will be lower. So, it is a vicious cycle, and we have to be careful not to be trapped inside for a long time. So I hope you liked this video. If so, please subscribe, smash that like button, and push the notification bell so you don't miss any of our upcoming videos. Have you been approaching investors as of recent and were able to close a financing round? If so, please leave a comment down below. Thank you.